There's also the element of the Ansell story here that you wanted to talk about too. What's happening with Ansell?
Ansell's on like 6.5, 7 times price to cash flow. And for context, that's the lowest it's been, including the GFC. So, Ansell had a huge run up on the back of the COVID pandemic, fantastic growth in earnings, a real sort of, I suppose, boom for the profits for them and a short-term windfall. Not dissimilar to some of the other healthcare providers, sort of Helios comes to mind, but as a result, it's sort of been sold off as now the COVID winners getting sold off in general, and everyone's sort of rotating into the COVID losers over the last 6 or 12 months, and I think as a result, the stock's now priced for no growth, and in reality, this is a business that's been able to grow sort of mid-single digit sales and kind of high to sort of double digit EBIT for a number of years now. It's a defensive sector, and I think healthcare stocks in general look pretty good. And of them, I think on a risk reward basis, Ansell looks really, really good for both this coming report in August and also for the next 2 or 3 years. I think as a result of the pandemic, healthcare spend, sanitation, hygiene as a theme is just going to be something that's more pervasive and more popular in society. I think we're not going to go back to just because there's no mandate for a mask at the airport. I'm still going to probably wear a mask when I go through the airports, just to prevent myself from getting even just a basic man flu. So I think just that awareness is going to drive consumption for Ansell, and as a result, I can see their earnings continuing to grow steadily, and at these prices, you're buying it as a business that's in decline essentially.